Good morning from our global headquarters in New York. I'm Manus Crenny. You're welcome to Bloomberg Brief. Let's set that agenda. Global risk relocked and reloaded as the carry trade is re-established in dollar-yen amid fading recession fears. Guidance is everything. Applied Materials delivers record revenue with an underwhelming outlook. The stock drops pre-market. A vision for America. Presidential nominees Harris and Trump both set to deliver their economic roadmaps as we ramp up to the DNC. A very good morning. There is a magical sense of invincibility of the U.S. consumer spending like Billio. In the past, we're going into day 7 of a rally in the S&P 500. 6 sessions and you put on 6.6%. The Russell 2000 at the bottom of your screen, up 0.4%, blew higher by 2.5% yesterday. This sense of invincibility in the retail sales numbers allays the growth fears for now. And you can all breathe easy. We're going to Walmart, we're being judicious, we're being smart. And if you wonder what the next leg up is, it is buybacks of the world unite. $1 trillion of buybacks are set to have taken place this year. Goldman Sachs buyback desk is just, the phones are hot. I know they don't do it by phones anymore, but the orders are coming in hard and heavy. Now, the 1% rise in the retail sales just blew a geyser up in terms of the momentum in the short end of the curve. What you had here was an unpicking of the need for dramatic rate cuts. We're now pricing less than 100 basis points, 92 basis points for this year. I think what we need to discuss next with Max Kettner is the quality of the cut. How hawkish will the cut be if it comes in September? That is the mood in the markets for now. If you thought that the carry trade was unwound, no. It was the magical opportunity to relock and reload by over 40%, selling yen and buying risk assets around the world. This is the biggest weekly rally that you've seen in Japanese equities since April 2020. Just take your mind back to the 5th of August. That's all I'm saying to you. Go back to the 5th of August and you begin to understand risk. Max Kettner, as I say, is the Chief Multi-Asset Strategist over at HSBC, and he weighs in on last week's sell-off, writing this. Markets were hit by a triple whammy. Well, we got that. August the 6th. Recession fears, concerns about AI, and the unwind of the carry trade last week. As scary as the drawdown and especially the surge in the implied volatilities was, risk assets are steadily getting back on track. They are indeed. Max Kettner, good morning. Welcome to the show. When I say relock and reload on the carry trade, so they've relocked and reloaded by 40% on that carry trade as of August the 5th. Does that shout embrace risk, or is it an ominous sign?
No, I don't think it's an ominous sign at all. I think it is really time to reload again. I think those discussions around how much of the carry trade still have to be unwound, I think some of those discussions were really a bit overblown because ultimately they're really dependent on what US growth and US activity data actually are doing. If indeed we are seeing more data, as we've seen yesterday, with better than expected industrial production data, with better than expected retail sales data, so with the growth picture really pretty solid, that should be really putting a bit of upside pressure once again on the dollar, a bit of upside pressure on dollar yen. That should be helping not only Japanese equities, but as he said, some of those carry trades as well, perhaps even currencies like the Mexican peso getting really back in vogue, but really in total, just support and more support for risk assets overall.
Okay, so it's not. It's more than just a short, sharp reload then, just to square that away?
Yeah, I think so. I think we're much more likely going to think about those 2 weeks of being a little bit of like a bad dream. I think, I'm going to go on holiday the next 2 weeks. Now I'm sort of thinking, oh, I should have been on holiday the last 2 weeks and go back to the office on Monday and say, what was that? What was that all about? I think that's a bit what we're going to be looking at that episode in a couple of weeks' time and be like, yeah, fine, that was a bit of a scare. And yes, we had the growth scare. But let's be honest, when we dig into the details of the labor market in the US, fine, it is slightly slowing, but it's nowhere near recessionary. A lot of, for example, the jobless claims data we can explain away with seasonality, with one-offs like hurricanes. So it really depends on the fundamentals. And the fundamentals, particularly in the US, they remain rock solid.
Okay, they are rock solid. quid pro quo, you are very pro-risk. I know you're nearly at your maximum capacity. Can I then evolve the narrative forward? If it is so robust and nothing on the horizon, Goldilocks has got her feet back under the table, the porridge is warm, how hawkish a cut? Do you still expect a cut in September? Let's actually box that away. Do you still expect a cut in September? And if so, Mr. Kettner, surely we must debate the hawkishness and the quality of that cut and the guidance.
Yeah, we absolutely do. We do think there is a 25 basis point cut in September because when you look at the inflation dynamics, in fact, look at this week's data, both on the PPI and the CPI side, not only the data, not only the absolute number, but also the internals. So what we're seeing sort of within inflation really looks pretty good, right? Super core and all some of those underlying inflation dynamics, they look really good. 50 basis points looks less likely, right? But 25 basis points, given that we've got that support from disinflation, from continued disinflation, looks absolutely on the table. And it's quite funny, like a week ago, probably the question would have been how dovish of a cut is that going to be? I don't think it's going to be very hawkish, right? I think they're going to say growth is still totally fine, but we do have the space to cut, and that's actually going to support risk assets even further then.
Well, let's talk about risk assets. I love the line from Walmart yesterday where the CEO says, we are being discerning, we, the shoppers here, that's normal people, Max, that go to Walmart, discerning, choiceful, and value-seeking. That's me. Discerning, choiceful, and value-seeking. Where are you most discerning in risk markets? If the carry trade is back, I mean, do you go for something as egregious, let's say, as being long Mexican peso, short yen? Or how do you display that max risk that you want to take?
Yeah, so we do think the recovery now is going to be led by equities rather than by credit, rather than by high yield credit, for example. Within equities, still really like tech, still like the AI story. I think some of that, those AI concerns around the earnings season, around the monetization, some of those concerns are really a bit overblown. So the tech and the AI story should continue. I think some of that dip that we've seen now offers a really great buying opportunity, but also still Japanese equities, still even after that rally, right? Like particularly for non-yen based investors, for sterling, for euro, for dollar based investors. On a hedged basis, Japanese equities still really make great sense. So there is, particularly in equities, there's quite a few things like the US, tech, AI. I think also the banks still make sense, both in Europe and in the US, you know, with now slightly higher yields, with really the growth data continuing to really show a pretty solid picture, pretty solid growth picture in the US. That should be also good for the banks, should be also good for some of the cyclical sectors like industrials. We have seen industrials globally, but particularly also in the US, undershoot against some of our models in that sell-off in the beginning of August. So there's quite a few things now that have really sold off, I think, unjustifiably much at the beginning of August.
You sound like a team that's gorging on risk. I mean, well, then let's put it in context. I'm looking at Deutsche Bank and their positioning narrative, and they're saying equity positioning is now underweight. If you look at the money that flowed in that shakedown, in that drive-by, money flowed into money market funds. You can say, Manus, that was majority of that was retail. Smart money was buying the dip. You saw that in some of the hedge fund narrative. How are the markets positioned? I mean, you are stoic. I will give you that. You're absolutely stoic in this view. So then what about the rest of the market? Is it underweight equity risk? And therefore, the ability to load up, as you espouse, is very real.
Yeah, I mean, first, it's great that you said I'm stoic only in my view, not in anything else. That is already, so I take that as a compliment. But I guess, you know, when we look at our view in terms of the sentiment and positioning side, in fact, a lot of the shorter term sentiment and positioning indicators that we track have gone back to the lowest level since we've hit March 2020 lows. So we've seen, for example, the VIX term structure. We've seen some of the de-risking of volatility target funds. Also, CTAs had by far the worst 5-day stretch since the sell-off around SVB, and even a bigger sell-off than during March 2020. So honestly, in terms of the sentiment and positioning, we've had such an extreme washout that in fact, also keeps us pretty bullish because, for example, when we look at CTAs and we look at volatility target funds, they probably need to start buying now. They're probably turning into forced buyers now after having been sort of forced sellers in the first 2 weeks of August.
Max, I will say this. You're not just stoked. Many a person comes on this show and they just don't have the same level of conviction in the calls. So well done. You know, you are strong on the calls. We take it on board. Max Kettner at HSBC, closing off the week where the S&P 500 rallies by over 6.6% and change. Other stories trending on your Bloomberg terminal this Friday morning. In an effort to reset his campaign, Republican presidential nominee Donald Trump is bringing on veterans from past White House runs. Corey Lewandowski and Tim Murtaugh, who worked on his 2016 and 2020 campaigns, respectively, returned to the fold as Trump loses ground to VP Harris in the polls. The number of new EVs from Chinese automakers being registered in the European Union is falling fast. They were down 45% in July over June, and the drop suggests that the EU's tariffs, which came into effect early in July, have slowed the influx significantly, helping the bloc protect itself from the automakers of low-cost competition. The British consumers follow the Americans in defying the signs of weakness. UK retail sales bounced back in July thanks to summer discounts for the Euros football tournament, unleashing spending at department stores and sports shops. Now, at the start of this week, we spoke to you about iron ore. This is the 5 days that saw a real implosion, down by over 8.5% at this stage. It's the steel-making staple. Macquarie says the market is oversupplied. You've got a flood of supply coming from the Australian and the Brazilian miners, of course, who are much lower cost. But this speaks to the slowdown in the demand side in China. Coming up in the show, Applied Materials, we mentioned it once, they extend their post-earnings decline despite hitting record revenue. What gives? That's next. And the Democratic nominee Harris is set to reveal her economic vision for the first time. More on that story with Lew Lukens of Signum Global Advisors right here on Bloomberg Brief. Context matters. It's Bloomberg Brief. I'm Manus Crenny in New York. Shares of Applied Materials, they're dropping pre-market after forecasting sales in line with the street's expectations, essentially underwhelming the bullish expectations of investors. Tom McKenzie is with me. Tom, it takes a lot more than delivering at the money numbers. Yeah. It's about the guidance, and I think what people are trying to understand is there a slowdown? They make the gear that go to the chip makers. So what exactly is going on?
Yeah, and look, Manus, we've talked about this before, haven't we, in terms of the gap between expectations from investors and the numbers that these tech companies and chip companies are able to churn out on a quarterly basis. And they came through with a beat in the third quarter, and they came through with guidance in the fourth quarter that also was above the estimates. Profits also coming in higher. And by the way, it was a record quarter in terms of revenues for Applied Materials. But nonetheless, they weren't pushing through and punching out the kind of numbers that many analysts had expected. And that's why you're getting a bit of softness in the shares. Look, the context is year to date, they've seen upside of about 30% on this stock. The CEO saying that demand for AI kit used to churn out those accelerators and GPUs is still there. And I'll quote from Gary Dickinson saying that demand remains strong. It's going to drive, and I'm quoting, tremendous chip demand. If you're looking for weakness, it came in more of the legacy part of the business. So chip supply, or at least equipment to the companies that make the chips that go into things like fridges and phones and industrials and autos. A bit of softness there. But in terms of that demand going forward, the team at Applied Materials see that demand continuing. And by the way, so does Bloomberg Intelligence, JP Morgan as well, saying that this company is well positioned for those emerging technologies going forward.
I'm waiting for the fridge to talk to me. I sort of stand there hoping that the chip inside it will respond one day. Now, the money flows out from this administration, the Biden administration, the CHIPS Act. And there's been another grant, hasn't there? Texas Instruments winning $4.6 billion in a CHIPS Act grant. So we're coming to sort of the finale of this policy. And again, it's going to be about execution now, isn't it?
It is going to be about execution. Look, you paint a lonely picture of yourself talking to a fridge, which I know is completely disconnected from reality, Manus. But talking of those legacy chips and fridges, it's Texas Instruments that makes the chips that go into the fridges and phones. And that's an interesting part of this story, because the money that's come through from the CHIPS Act, $39 billion set aside, it's not just going towards those cutting-edge chips, it's also going towards the legacy chip makers. In terms of implementation, you're absolutely right. They have to spend it. They have to spend it wisely. They're building out 1 factory in Utah, 2 in Texas, and they have been given this award, $4.6 billion, but potentially up to $8 billion in tax credits as well. And this is in the final stages now of this CHIPS Act. It's expected to wind up at the end of this year. Texas Instruments, by the way, looking to spend upwards of $40 billion in total on the new build-out around producing these legacy chips for the US, as administration officials and those in the EU are increasingly concerned about China's push into that slice of the chips market.
Yeah, some would say these are incremental amounts of money in the overall scheme of the capex that's going to be needed. Tom, good to see you. Have a great weekend. Tom McKenzie there on the Tech Beat with us here on Bloomberg Brief. There's another stock worth keeping an eye on. You got it, Paramount. You thought that story had died. No, a potential bidding war is brewing as the media group. You've got Signum, Edgar Brofman, is said to be close to making an offer. Bloomberg's Kimberly Adams joins me now. Kimberly, good to see you. How exactly did we get here? I mean, I thought we'd squared this away. You know, Sherry Redstone, David Ellison, and Skydance, a happy deal done in the end. So what's the spoiler?
You thought, hey, we're in the summer, we all can go on vacation now, right? Yeah. So what happened is, you know, they agreed, Ellison and Sherry Redstone, once they decided with this deal that it would be okay, they had this 45-day window where any potential bidder could jump in, you know, to put their stake into the company, whether or not they were interested. So now this is where we have Bromfin. And so what happened is we have Sherry Redstone agreeing to sell the family company, and she has a 77% voting stake in this company, and she sold it for $2.4 million. That was the deal. But we're still waiting for this 45-day window, and up pops Bromfin.
Yeah. I mean, he's going to have to come up with some pretty lumpy numbers. He was in the running. I mean, just a couple of weeks ago, there was this story that was him and Bain were in the running for $2.5 billion. But if I look at the deal that's been put together for the overall Paramount, so Sherry's stake along with the others, you're looking at an $8 billion investment. So how does he close this gap? What do we know about him? What do we know he's going to offer? Again,
well, that bid was first reported for, as you mentioned, between $2 to $2.5 billion, right? Yeah. But he's no stranger to media. He already is on a chair at Fubo TV, which is the sports network there. He led an investment bid, by the way, for Time back in 2017, unsuccessful bid at the time. So he is ready to make this offer. And also, Ellison and Redbird Capital, those partners, they were going to invest $8 billion for a controlling stake in Paramount. And they were going to merge it with Skydance, which would value that company at $4.75 billion.
Okay.
So Brofman is coming off, and he's framing his proposal saying it's better for investors because it won't dilute. Right. It won't dilute the company as he believes Skydance would. So his group, according to the Wall Street Journal, he's having talks right now with backers like Fortress Investment and Roku, believe it or not. And all this coming on the heels of Paramount with, what, 2,000 jobs that they just, you know, announcing this week that people who work for the company are laying off, getting their jobs axed, you know, so.
And they wrote down the value of their TV assets.
But this isn't over, because it's the 21st is when that 45-day window closes. So this dance isn't over. The dance card is still filled.
Well, you just make sure you're ready to rock and roll, because I get a feeling that this could turn into a merry dance of a few more people.
We should put our money together and buy it.
Well, listen, you get the Amex side, I'll give you my Visa, and we'll rock and roll. That's Bloomberg's Kimberly Adams. She's got faith that I've got a few more dollars than that. Coming up on the show, what else is going to make the headlines around the world? Well, these are fairly potent images concerning the spread of Mpox. Context matters on Bloomberg. Friday edition of Bloomberg Brief. We got there. Front pages for you. This is what's making news headlines around the world. Kick off with the New York Times. Thailand has a new prime minister. The heir of a powerful and polarizing dynasty has been picked to lead. And that's just 2 days after the previous prime minister was ousted It marks just the latest blow to Thai democracy. BBC runs with Mpox. Sweden has recorded its first case of a more dangerous type of Mpox outside the African continent. At least 450 deaths in the initial outbreak in the Congo. The WHO has declared the spread of the virus a global health emergency earlier this week. And on Bloomberg, we're leading with a top Chinese chip gear maker suing the Pentagon to void sanctions. Now, the manufacturer is AMEC. The case is centered on being placed on a blacklist by the Pentagon, and the company argues that it's been unfairly linked to the Chinese military. We're counting down to the DNC, and we're going to catch up with Lew Lukens of Signum Global Advisors on what to expect as both Trump and Harris lay out their roadmap for the economic policy for the United States of America. Good morning from New York. From our global headquarters in New York, welcome to Bloomberg Brief. I'm Menace Craney. Let's set your agenda. Global risk relocked and reloaded as the carry trade is re-established in dollar-yen amid fading recession fears. Outlook is everything. Applied Materials delivers record revenue with an underwhelming guidance. The stock drops pre-market. A vision for America. Presidential nominees Harris and Trump both set to deliver their economic roadmaps as we ramp up to the DNC. Very good morning. It's been the best week for stocks in 2024. We're up an eighth of 1%, holding on there. The invincibility of the consumer is affirmed in the United States of America. 24 hours ago, up 1% on retail sales. We're going into the seventh day of a rally in these equity markets. The Russell 2000 up 2.5% yesterday. The growth scare pushed aside. We've just had HSBC, Max Kettner, full on risk-taking everywhere. He wants to be long of equities. He wants to be fully max bull in the equity AI trade. And that came through from the Bank of America story as well on the fund managers survey. Buybacks aplenty over at Goldman Sachs. Buyback desk, it's on fire. Yields. Is it time to re-embrace your inner bond buyer? Because you got this backup in yields. Two spiked by 16 basis points at one juncture yesterday. As you can see, we're giving back a couple of pips this morning. The debate now will be is the quality of the cut that you get in September. 5-6 days ago, it was about a dovish cut. Now we must debate whether it is a hawkish cut. And dollar yen, I get a little bit of a give back this morning. This is a drop this morning in the dollar trade. Nomura are saying the shorts are relocking and reloading. And you've got a real progressive move in Japanese equities. Again, a top favorite of HSBC, Max Kettner. Get in there on your Japanese equities if you want diversification. The Nikkei finishing the day up 3.64%. Let's get back to politics. On this side of the pond, the Republican presidential nominee, Donald Trump, takes a jab at his Democratic opponent's economic record. VP Harris prepares to unveil her economic agenda later today. Let's take a listen.
Harris has just declared that tackling inflation will be a day one priority for her. It's going to be day one. But day one, really, for Kamala was 3.5 years ago. Where has she been? And why hasn't she done it?
VP Harris and President Biden spoke yesterday in their first joint appearance since he dropped out of the race.
I could speak all afternoon about the person that I am standing on this stage with. Our extraordinary President Joe Biden.
I have an incredible partner. The progress we've made, she's going to make one hell of a president.
Ringing endorsement there from the president for Harris. Joining us now, Courtney Rosen of Bloomberg Government. Courtney, good to see you. Getting up early. It's going to be a busy week for you next week. So let's set the table. Today's about economic policy. How much depth will there be apart from banner headlines?
We're going to hear the most specificity that we've heard so far from Vice President Harris about how she would govern the economy should she be elected. She's going to propose up to $25,000 in assistance for people buying a home for the first time. Now, if you'll remember, housing funding or support for housing was something that President Biden wanted to do but couldn't get Congress to approve. She's also going to talk about limits on price gouging, which is another topic that has come up given inflation and grocery store prices. So we're going to hear her talk about what she wants to do for the economy, and we haven't heard so much about that so far in the campaign from her.
Yeah, and obviously she's going to need Congress again if she's going to go for this. I mean, home affordability in this country is pretty tough at the moment, and you've got to say, 66 million people don't even earn enough to buy a $250,000 home. So it's ambitious. Let's pivot to Trump. Obviously, again, there's been a lot of accusation towards Trump. You know, stop your whining, I think is what Nikki Haley had said towards former President Trump. What is his strategy? Because there's been a shift in the hiring as well. Corey Lewandowski is back in the inner circle. What does that mean for strategy?
President Trump former President Trump, I should say, is still trying to figure out what his strategy will be against Vice President Harris. We've heard a lot of different lines of thought from him in the last couple weeks about what vulnerabilities that he'll seize on when he's trying to compare himself to her. When Bloomberg interviewed President Trump last month, before Vice President Harris was in the race, he talked about supporting new tariffs and he talked about decreasing the corporate tax rate. So those are two economic ideas that he brought in about a month ago. We haven't heard him talk about that a ton. And so we'll have to see how the strategy shifts when we have new folks coming into his orbit on the campaign.
Okay, let's see, do they make a difference and a shift in strategy? Courtney, thank you so much. Courtney Rosen there of Bloomberg Government. My guest this morning is Lew Lukens, Senior Partner over at Signum Global Advisors. Lew, good to see you this morning. Let's just step back from this for a moment. There's been this halo effect around the Harris campaign. It's been a brat summer. Memes have been flying. Social media is really, really galvanized. And it's almost like this halo effect in raising money and awareness and voter awareness. That momentum, have you seen this before in political history, and will it last is the key issue?
So it is somewhat reminiscent of what we saw with President Obama's first campaign, the level of excitement that we're seeing at the rallies and in the crowds, and the momentum. And it is definitely a honeymoon phase. I think it will certainly continue through next week. I expect the Democratic National Convention will be extremely well choreographed, highly scripted. There'll be from former party elders, President Obama and President Clinton, to grassroots supporters, all singing Kamala Harris's praises. But after the convention, I think reality will start to sink in, and she's going to have to do a better job, I think, of defining her policies. President Trump, in that clip that you showed, is not wrong that her day one was 3.5 years ago. I mean, she has been involved in every administration decision for the last 3.5 years. So the challenge for Kamala Harris is to pick the good parts of Joe Biden's economic policies, and there have been many good parts, and to make sure that voters understand what the Biden-Harris administration has been doing for them over the last 4 years, and to pledge to continue those policies.
It's interesting. Various people have sort of said to differentiate herself from Biden, she must set herself apart with a future economic policy. But from what you're saying, it is align with the Inflation Reduction Act, align with the CHIPS Act, and progress those forward? Or is it to try and differentiate in some kind of way what she is going to bring?
I think she has to align with those policies. It's very hard for her to distance herself from policies where she was at the table for the last 3 years making those decisions. She can align with those decisions, but also propose new policies for the future. And I think that's what we'll see her trying to do. So this idea of, going after price gouging or help for people to buy homes, those are new ideas that she can build on. But it has to be a combination, I think, of taking responsibility and ownership of the policies that have been put forward over the last 3 years and that have been largely successful, I think. But at the same time, she has to distance herself from high prices and immigration policies. So it's a very tricky path for her to walk.
She's going to need full Congress support. I mean, if you're going to hand out $25,000, if you're going to hand out $25,000 in support. When interest rates are 6.5% on mortgages, so giving money out in this kind of housing market is an anathema if you really think about it. And price gouging, you're going to need full Congress behind that. So these are headlines, but you need full Congress behind you to deliver on those.
Well, if it's budgetary policy, so for example, fiscal support for buying houses, Democrats could do that if they have a simple majority in the Senate and the House, and they control the White House. So using budget reconciliation. So right now, it looks like Republicans will likely take control of the Senate. If Republicans control the Senate, she will not be able to pass those policies, and I don't see them going along with those. If, however, Democrats can keep control of the Senate and take control of the House, they could pass some of these policies.
Okay. I'm looking at some of the polls, and we update our own. The most recent one that we've had was the New York Times Siena poll. Harris 50% and Trump at 46% in Wisconsin, Pennsylvania, and Michigan. And what I want to understand from you is, where does she and can she cut through in Pennsylvania and in Michigan? She is very vocal on abortion and has the capacity to really win that narrative relative to Trump, seems to be the general consensus. Is that what will cut through in swing states? Or how do I differentiate what will cut through and move the dial?
So abortion is definitely an issue that is motivating parts of the Democratic base. The polling has shown, since Kamala Harris entered the race, that other very important demographics within the Democratic base are much more motivated than they were when Joe Biden was the candidate. I'm talking about young voters, black voters, Hispanic voters. In all those groups, the level of enthusiasm and the number of people saying they will vote for Kamala Harris has gone up in the last 3 weeks. So this is going to be an election about core voter turnout and getting out the base. And I think having her as a candidate, thus far, the polling indicates, is going to drive much more enthusiastic Democratic voter base turnout than Joe Biden's candidacy was doing.
How much truth do you put on the narrative that the Trump campaign is flailing? It's in disarray. It doesn't know the right direction to go. What veracity is there to that?
I think there is some truth to that. And I think Donald Trump has a very effective and very professional campaign organization working for him. Their challenge is that the candidate, Donald Trump himself, is relatively undisciplined. So we've seen this in these press conferences, including the one he gave yesterday, where he essentially talked for 2 hours, but he has a hard time sticking to message. There are very effective and simple messages that he could be putting out as he tries to attack Kamala Harris, but he veers into the personal, which, polling shows that voters don't like, and he has a hard time sticking to very simple economic messages. And so the campaign itself is a pretty well-run campaign. We saw this at the Republican convention. That was a very well choreographed and produced event. But Donald Trump himself is I think, thrown off. I think he was counting on running against Joe Biden. He believed he was going to beat Joe Biden, and he doesn't quite know how to run against Kamala Harris, and he's still trying to find his footing. I expect he will over the course of the next couple of weeks. But of course, early voting starts in some states in America in just over a month. So he doesn't have a long road ahead of him to really pull himself together and be more disciplined on the campaign trail. He's got to do it pretty quickly.
When Nikki Haley says stop whining, how relevant is that? She had a fairly robust following. I know it's on a TV show. I know she's got to say something to pop the soundbite. I get it. I'm in the business. How relevant is that narrative?
I think it is relevant. I think she is pointing to a fact that many Republicans wish Donald Trump would stop talking about 2020, stop complaining that the election was stolen from him, stop talking about how the deep state is against him, and focus. There are some very effective Republican talking points. Prices are high in America. Many Americans find things unaffordable. The border needs to be controlled. There's too much illegal immigration coming over the southern border. These are very simple, effective talking points. Yeah. And Donald Trump tries, but then he distracts himself and he gets off topic and veers into these sort of personal grievances. And I think a lot of Republican voters, and certainly swing voters and independent voters, are tired of it.
Okay. Lew, let's see what's delivered in the headlines and the theatre of the DNC next week. That's Lew Lukens of Signum Global Advisors. Coming up, underwhelming sales forecasts keeping shares of Applied Materials In the red this morning, pre-market down 2.75%. This is Bloomberg. Stock of Applied Materials, it's dipping this morning pre-market. Investors had high expectations for the AI spending to pay off, but they were underwhelming in terms of the guidance, and that's what's taken the stock lower this morning. Pre-market, Tom McKenzie is with me. So, Tom, square it away, because it's not that the sales were underwhelming, it was the guidance, and this is about the foreboding of the spend by the big people that they supply in terms of AI build-out.
Yeah, and for investors who have seen a 30% run-up in shares, this is a stock that's trading at 22 times forward earnings. That's above its two-year historical average of 18. So valuations may be looking a bit rich when they come essentially in line with the estimates for the third quarter. They guided a little higher in the fourth quarter. Profits are better as well. It was a record quarter for the third quarter. But when you've seen that run up 30% year to date, maybe this is a bit of profit taking coming through from investors. Part of the business was a little softer around the supply of chips, or at least equipment that makes the chips for things like the automakers and industrials. But looking ahead, the CEO executive is still very confident in that AI theme, that AI play. And I'll quote from the CEO saying that he is seeing that demand for AI data center kit going to be tremendous in terms of the demand going forward. JP Morgan also saying that this is a company that is well positioned for further upside around these emerging technologies. But when you compare it to the valuation, maybe this is just a bit of froth being taken off the top of this stock.
Talk to me about the CHIPS Act. Again, there's another headline this morning. Campaigning is ramping up. The DNC is next week, $4.6 billion for Texas Instruments. Can you contextualize that for me? I mean, nearly $40 billion has been handed out by this administration. Yeah. What is that in the scale of incentive to build bigger chips bases here in the United States of America?
It's slim, right? But it is not inconsequential. It's the $4.6 billion for Texas Instruments, plus up to $8 billion in terms of tax credits. But as you rightly allude to, in terms of the scope and scale of the spending that's coming through on these data centers, on these foundries for companies like Texas Instruments and the factories, it is something of a drop in the ocean. They're looking, just as a single company, to spend $40 billion, so more than an entire CHIPS Act, which is $39 billion. Texas Instruments looking to spend $40 billion between now and about 2030. But these incentives obviously help to pave that path towards those goals. They're going to build an additional factory in Texas, 2 in Texas, 1 in Utah, and part of that will be funded, at least part of that, from the incentives coming through from this administration. And it's also a reminder that the funding isn't just going to those AI accelerators, the GPUs, the Intels of the world, the companies making these very high-edge, leading-edge, high-tech and cutting-edge chips like Intel and TSMC, but also to Texas Instruments, which supplies the more quote-unquote legacy chips for smartphones and your fridge, Manus.
And the fridge, Tom, never forget the fridge. And my iRobo as well, my little cleaner as well.
Yeah.
Full chip, full technology household here, the crowning household in the United States. Tom, thank you very much. Have a great weekend. Keep the tech dream alive. One story which is perhaps one of the most read on the Bloomberg terminal this morning over the past 24 hours. It is on the Mpox virus spreading outside the African continent. Now, it's the first case reported in Sweden, and a Bavarian Nordic is the only company with a vaccine approved for use in the US and in Europe. The Danish company wants permission to use the jab for adolescents as the new variant of the virus spreads. Let's get to our healthcare reporter. It is Janice Q. She joins me now. Janice, I mean, this was centered in the DRC in Africa. It's spreading. It's gone into Europe now. What is the latest on the trajectory and how quickly this is spreading?
We are still waiting for better data. The DRC is a particularly tricky area to do good surveillance, but getting approval for adolescents for the vaccine wouldn't only be good for the vaccine maker. We know that so far in this outbreak, children and adolescents have been the most affected. In fact, 60% of the deaths in the DRC have been in children under 5. It is not easy to get vaccine approval in adolescents and younger children even more difficult. But definitely with the public health emergencies that both the WHO and Africa CDC declared this week, it has prompted action. And so getting vaccines to the areas that are most affected, which, as you say, is Central Africa, is paramount.
And in terms of the containment, you know, the vaccine for this is produced by one manufacturer, but you know, we're a long way from any kind of major rollout in that. In terms of containment and border closures, what is the latest there?
So both the Africa CDC and the WHO have strongly said that they do not see a need for border closures. As we saw with the COVID-19 pandemic, you know, once it's spreading, closing borders is not a particularly effective measure. Focusing efforts on other measures would be probably far more effective. We have seen China say that they're going to be doing greater surveillance from anyone coming in from the African continent. Even in Nigeria, on the continent, they are also upping their surveillance. And so there are containment measures in place. But again, I think looking at the epicenter, which is really Central Africa, and trying to find containment measures there, which can include things like antivirals. It doesn't have to be just vaccines. I mean, even something as simple as a really good household disinfectant can help to kill this virus. And so getting that messaging across, getting you know, people on the ground to get out to these communities, that is key.
Yeah, as you say, a very simple disinfectant can be effective. Janice, thank you very much. Janice Q on the very latest from the Mpox spreading from the centre of Africa. Coming up, we are at the end of a pretty exciting week for risk. We're going to set your agenda for economic data and Fed speak. Don't forget, context matters every day on Bloomberg. Your day ahead looks a little bit like this. Economic data, you've got US housing starts and building permits at 8:30 a.m. That's on a day when, of course, Harris is set to announce incentives for first-time buyers if she comes to power. UMich, consumer sentiment, hits the tape at 10 a.m. And then Fed speak. Chicago Fed President Austin Goolsbee at 1:30 p.m. Let's hear what he's got to say. Big moves in the bond markets yesterday. Short end of the curve up by 16 basis points at one juncture. Some stocks on the move for you. You've got Fox Corporation rallying. Wells Fargo double upgrades the stock from underweight to overweight. The analyst highlighting sports streaming segment as the opportunity. Microchip rising after Piper Sandler boosts the stock to overweight, seeing gross margins on the upside up 2.5%. I'm going to leave you with a vision of equity markets. The flow show from Bank of America makes it very, very clear. Money is flooding in, not just to U.S. equities. $5.5 billion went in the week through August the 14th, but globally, the flow into equities has been for 17 weeks in a row and attracted $11.5 billion. So that flow is there. And in terms of the debate, it will now be, if there's a cut of 25 basis points in September, what is the quality of that cut? Would it be a hawkish cut? The narrative continues on Bloomberg Surveillance from the Brief team. Thanks for watching.